About value of supply, the provisions are given in section 15 of CGST Act. Now, when we talk about section 15, it says value would be the transaction value. Transaction value meaning price actually paid or payable for the supply of goods or services. Transaction value will be applicable only when two conditions are satisfied. First one, price is the sole consideration. And second one is supplier and recipient are not related persons. So the transaction value would be accepted only when these two conditions are satisfied. Now what happens when one of the conditions is not satisfied? That you don't learn at inter-CA level. So be very careful. Two conditions for transaction value to be applicable. You are not receiving anything in excess of the price. Second, you are not selling to a related person. If any of these conditions is broken, then what to do? That is not there at inter-CA. Okay. Now there are certain inclusions in transaction value and certain exclusions from transaction value. Let's understand these inclusions and exclusions. See it carefully. When we talk about inclusions, the first inclusion is any tax other than GST and compensation cess. So, any tax other than GST and compensation cess will form part of value for the purpose of GST. Careful. Sir, this would lead to double taxation. There would be a tax on tax. You are absolutely right, but the law very clearly states that any tax other than GST and compensation cess will be liable to GST. Now, there is an important circular issued by CBIC which clearly says that TCS collected under Income Tax Act 1961 will not be liable to GST. This is a welcome circular. Tax collected at source under income tax would not be considered as part of value. Thereafter, the second inclusions is any charges incidental or ancillary to the supply. So when I say incidental or ancillary to the supply, it can be in the form of transportation charges of certain goods, installation charges for certain machines. There could be packing expenses, special packing charges, warranty charges. All these are incidental or ancillary to the main supply. All this will get added to the value of main supply. Thereafter, the law provides for any third party payment made by recipient on behalf of supplier. Careful. If the recipient is making a payment which the supplier has told him to pay, then that amount will be added to the value. For instance, say suppose a company sells a bike for 38,000 and says that the dealer has to pay 2,000 extra over and above this to an advertising company. Otherwise, they will not sell the bike. That means they are putting a condition that this 2,000 extra has to be paid. This 2,000 rupees will get added to the transaction value. So be very careful. Any third party payment made by recipient on behalf of supplier will get added to the value. Then the law talks about any subsidy, direct linked to the supply. See, it has to be a subsidy directly linked to the supply. That means a particular transaction has to be associated with it, and that should have a direct link. I'll give you an example. But say suppose it is government subsidy, then it would not be liable to GST. Now, let's understand it with the help of an example. If the fees of an education institute is 55,000 and government is saying that government will pay 5,000, student has to pay 50,000, then GST will apply only on 50 because government subsidy will not be liable to GST. But say suppose fees is 55,000, a charitable organization is saying that we will pay 5,000, student is required to pay only 50,000. Do you agree that this is directly linked to a particular supply? It is not a lump sum amount which is received by education institute. It is based on number of admissions. So for every admission, 5,000 charitable trust is paying and 50,000 student is paying. In such cases, it is a subsidy which is directly linked to the supply, and such subsidy will be liable to GST. So the education institute will have to charge GST on entire 55,000, and we will assume it to be coaching classes because coaching classes are liable to GST. Clear? Okay. Sir, if it is a subsidy which is not directly linked to a supply, just a random amount received, then in that case, it does not have a correlation with a supply, GST will not be applicable. Okay. Now remember two things. If nothing is mentioned in the question, then ignore government subsidy. Don't add it to value. Second point. If nothing is mentioned for other subsidy, please add it to the value and charge GST. Please follow this thumb rule always in the exam. Government subsidy, if nothing is mentioned, ignore it. If other subsidy nothing is mentioned, please add it to the value. Okay. The next inclusion is something which you will be familiar with, is interest on delayed payment for a taxable supply. Interest on delayed payment for a taxable supply. So, if a person is collecting interest and the underlying supply is taxable, then interest on that would also be liable to GST. Obviously, other interests are exempt from GST. Then, we have a discussion on discount. See, if it's a pre-supply discount and it is shown on the invoice, then it is excluded from GST. Pre-supply discount which is shown on the invoice. Now, what is the meaning of pre-supply discount? Pre-supply discount would mean where before or at the time of supply, a deduction is given and the other person is paying a lower amount. For instance, if a product is available for 100 and there is a 10 rupees discount which is shown on the invoice and the other person pays 90, then value will be considered as 90. Clear? Okay. And the last one is post-supply discount known at the time of supply. Careful, careful. Post-supply discount which is known at the time of supply plus ITC is reversed by recipient. ITC is reversed by recipient. Now, what is this? Careful. See, when we talk about discount, there could be instances where there is an offer saying that today you buy 10 units, but if in a quarter you buy total 100 units, you will get an extra discount on all 100 units, 10%. This discount is not given at the time of supply. This discount is given when the target is completed. This is a post-supply discount. And was it known at the time of supply? The answer is yes. So in that case, if ITC is reversed by recipient, in that case, a benefit would be available. Clear? So ITC should not be claimed by the recipient to that extent, to the extent he is getting back his GST paid. I'll just take a simple example. Today when the sale was made, 100 rupees, GST charged 18 rupees. Transaction closed, 18 rupees has reached government. Now there is an offer saying that if I buy a particular specified quantity throughout the quarter, then I will get extra discount of 10 rupees. Now when I am getting that extra discount, first of all, was it known at the time of supply that if I meet the target, I will get extra discount? The answer is yes. So the supplier will give me 10 rupees plus GST on that. Now when supplier has given me GST plus 10 rupees, can I take full 18 rupees as ITC or I should reduce my ITC? I should reduce or reverse my ITC. And then a deduction can be claimed by supplier from government and we can get that 1.8 back from government. So remember, two types of discounts are excluded. Pre-supply discount is excluded immediately. Post-supply discount is excluded at a later point of time if recipient has reversed ITC. Clear? Okay. Now there are basically two types of questions which are asked in valuation. One type of question is where the product prices are given or the service price is given and you are required to find out the transaction value. Now, whenever we talk about product price or service price, be very careful. They will give you the adjustments separately. Adjustment separately meaning some transportation charges, packing charges, other taxes, all these information will be given separately. Now, in such cases, what happens? In such cases, first you will add the inclusion. Product or service price is given. To that, you will add the inclusions. Once you add the inclusions and subtract discount and government subsidy, which has not been already subtracted. Remember one thing, if discount and government subsidy is already subtracted, don't subtract it again. But if it is not subtracted, then subtract it to arrive at transaction value. This is first type of problem where product price is available to you. The second type of questions which are asked is a case where all inclusive price is given. Now what is this all inclusive price? All inclusive price meaning it includes everything and it might be before discount. Now in such cases, how will you find out transaction value? From this all inclusive price, you have to first remove the exclusions. Then you will remove GST to arrive at transaction value. Never forget this. If an all-inclusive price is given including GST, then in that case, first remove all the things which are not liable to GST. Then within that price GST is also there. Remove GST to arrive at transaction value. Never ever first remove GST then remove exclusions. No. Say suppose 100 rupees is including GST and from that the shopkeeper is giving a discount of 10 rupees. Then first remove discount and 90 rupees will be considered as inclusive of GST. From this you will find out transaction value by removing GST. I again repeat. First remove the exclusions and then remove GST to arrive at transaction value. Okay. One important exam tip. I would recommend you to write this. If the question is silent, then consider all the amounts as exclusive of tax but interest, consider it as inclusive of tax. Don't forget the main point. If the question is silent, only then you will do this. If the question is silent, consider all the amounts as exclusive of tax, but interest, please consider it as inclusive of tax. This is the standard which is followed for exam purpose, and follow it strictly. Clear? So transaction value, inclusions, exclusions, type of questions, and certain examples. See you all in the next video.